Winston and Felix here, and we want to walk you through something that's incredibly important, and it is what makes most people lose money or leave massive amounts of money on the table, and it's avoidable if you really understand the longer term patterns and what's going on out there, and it doesn't get talked about enough because everything is driven by fear and FOMO and all of that kind of stuff and very silky ears. So let me walk you through it. I'll give you some data points. I'll put some charts on here, the screen for you, and hopefully this will set you up for a motivated week ahead and an amazing, amazing October. What do you think, Winston? You going to stay with us? Sit down. Sit down. He just wants to get more into the foreground, don't you? Or closer to the ears. Right, I've got a couple of notes here so that this is a bit more coherent. So the first thing is that, well, you know, everyone is a bit bearish right now because, well, there are wars going on and presidential elections, and people have really strong views on that. We had amazing jobs data out on Friday, which is a complete load of nonsense. A few more words on that in a moment. But people are worried, is, you know, the NVIDIA rally gone too high? Are we in another chip bubble, AI bubble, whatever the bubble might be called? And therefore people are selling. And people are selling early, and guess what? They're going to miss out on a heck of a lot of money. Let me put a chart on the screen here for you. Look, there is always a reason to sell. There is always something terrible happening in the world, you know, shortage of cucumbers or something like that. That wouldn't happen, would it? No. But, you know, something dreadful, no puppies to play with. If you go back in history and really look at this chart here, look at all the disasters we've had, from the Cuban Missile Crisis to all the wars to COVID and absolutely everything else in between, people said, sell, sell, sell. It's the only way to keep safe. And somehow we have this instinct in us that we want to get the money closer to us, and we feel it's closer when it's in cash, in a bank. It actually isn't. So if you look at this chart and you print this out, and next time you read something bad, someone telling you get the heck out of this, then think about it, okay? Think about this. If we look at the Dow Jones Index and just how it's gone in the long run, we're on track to hit like 60,000. Yeah. If you look at the S&P 500 and just look at the long-term trend, we're going to hit 8,000 on the S&P some point in the nearish future. And that might seem like far off. I think we're trading, what was it, 5,700 or something last week. But it's going to happen. And I'll tell you why. Well, first of all, there are less and less and less shares available because companies buy their own. So there is actually less to invest in, which means shares in themselves go up in value. Secondly, the amount of money that companies make per employee has gone up and up and up over the years. And it's going to go up a lot more with AI because they'll be able to replace a lot of people. And that's a whole nother story there, what to do about that. But from an investor point of view, this is very good news. Companies are going to get more profitable. Their margins are going to go up because they're buying back their own shares. The profits per share are going to be higher. Therefore, share prices are going to be higher over the long run. Not necessarily tomorrow or the week after, but in the long run. And exactly as I just said, look at this chart. Earnings per share, EPS, is likely to double during the 2020s. So over the next 6 years. And it's growing somewhere between 6 and 7% per year since the 1950s. So if you compound 7% a year over 10 years, it isn't 70%. It's actually about 100%, more or less. So you are doubling the profitability of each share that you hold every 10 years. So no wonder the market goes up, right? It's not really rocket science. It's just time frames, time horizons. So if you think that you have a very strong view on Kamala or Trump winning, and I totally get that. People have really strong opinions on politics. I used to be one of those. I used to be very active in politics. I gave it all up because I realized life's too short and it leads mostly to frustration. So what do I do now? I focus on looking after me and my family and the creatures that I love and leave it at that. And then we have a beautiful community where we teach people how to become financially free. If you want to learn how we do that, by the way, join me on I think it's Tuesday, at felixprehn.org/training, and I'll teach you literally how we're up 94% this year. Yeah, if you want to know, I'll teach you. It's free. felixprehn.org/training, so join me over there. But it doesn't really matter. Honestly, the market goes up no matter who's president. Yeah, you might have a year or two that's not as good, but in the long run, again, completely irrelevant. Presidents are not as important as you think. They're not, especially if you're talking about money. And do we have down years? Yeah, we get some, but not that many. If you look at this little chart here, we have a lot more up years than down years, and the down years tend to be smaller. You get the occasional big one, like a COVID year or something like that, and then you get a massive recovery the year after, typically. And especially given the way politicians and the Fed have evolved into these soft, mushy people who just throw stimulus after stimulus at us, it's very likely the market's going to continue to go up and up and up. And for that reason, bull markets have been longer and longer since the 1990s, because that's kind of when politicians flipped and the Fed presidents. Remember Greenspan? He was kind of a tough guy. The market was terrified of him. Now Fed presidents are kind of these mushy, soft people who want to keep the party going, because probably have large stock portfolios, and they want a job on Wall Street afterwards. So this is the same with politicians. They're all in the pockets of, Wall Street. So therefore, the parties get longer and longer and longer. You get very short little crashes, which, by the way, are the golden opportunity. So really, unless you're retiring tomorrow and you need to live off your investments, if you have some income, you should actually be begging and wishing for some sort of crash, because it'll be the best opportunity you have to accumulate some wealth much, much more quickly. So in short, your stock portfolio is going to keep going up. Unless you do stupid stuff and you just buy one stock and you put it all on that. You have access to the greatest stock market in the world in New York. You have access to the greatest companies in the world. So don't just buy one stock. Don't be some sort of religiously driven idiot because you're part of some Reddit gang and it makes you sound cool. It doesn't. It's a stupidly risky thing to do, no matter how much you like the stock. Everybody who's a smart investor has more than one stock in their portfolio. So if you do that, I think you'll do very well. Now, in the short term, there'll be some hiccups, also pre-election probably. The jobs number on Friday was a funny one. You know what they did? They seasonally invented about 900,000 government jobs. You wouldn't think you'd need to seasonally adjust government jobs, because you'd think they're either there or they're not, and you'd know because you pay them. You would not be off by about 900,000 jobs, but they are. And it's a way of artificially depressing the unemployment rate and making yourself look more electable. And it's not a trick that Democrats invented. No, the other side is just as bad. So I don't really believe that number. I still think there is some softening in the US economy, but I also don't think we're going to get a big recession, because the government's going to spend us out of it. And no matter who wins, they're going to do basically the same thing with different tools. From a financial point of view, don't get me started on politics. I've yet to have a conversation about politics where the other side said, I see your point. Okay, yeah, I think you're right. I think I'll change my mind on this. It doesn't happen, does it? So therefore, the conversations are largely pointless. Much, much better to talk to Winston. So all I want to say to you is sit down today and make a long-term plan. And factor in that the market's gone up 10.5% for the last 30 years. Go and get a compound interest calculator somewhere online, anyone will do, and say, I'm going to invest X amount of dollars on the first of every month. And I'm going to do this for the next 20 years. And it sounds terribly dull, doesn't it? But then look at the numbers. And now I think you're going to get excited. And once you're excited, you're going to figure out a way to put more money into that portfolio every month. That is the solution to getting wealthy. And that is the solution to becoming the 1% or the 0.1% or whatever you want to become. And that's why I trade, because it brings more money in the kitty. And it's more money that I can put into the stock market, which will compound at crazy levels and make Winston more and more wealthy, so we can buy more cucumbers. I hope you got a little bit of value out of this. I wish you a beautiful start to the day. Come and join us on, I want to say Tuesday, at felixprehn.org/training, and we'll teach you how we're up 94% so far this year. I wish you a beautiful day. All the best. Winston, any last words? Hey, sit up, sit up, sit up. He's just rolling over instead. That is what he's doing instead. But then he is very cute, so he gets away with it. Take care. Felix here. If you're worried about what your favorite tech stocks are going to do next week, this is the video for you. We're going to walk through Tesla, Google, Microsoft, the S&P, Apple, QQQ, Amazon, Meta, PayPal, SoFi, Palantir, Nvidia, and the VIX, the fear index, probably in that order.